Hello, all 7 of you. How's it going? You guys see me okay? I think so. Good day in the stock market. Who knows if it'll close like this, but felt like a good day to do a YouTube. So let's do it. I want to talk about Kohl's first, ticker KSS. I have put on call spreads there in July. I own 60/70 call spreads and 62/50, 67/50 call spreads. The thesis there is pretty simple. There is an activist that originally struck a deal with the company last year to put some board members on, and they had a standstill until January of this year. And they are now going full-blown activist to change the entire slate of the board when the board meeting comes up in most likely May. The backstory here is that there are at least 2 bidders for the company that bid 64 and 65, I believe. And the company rejected them for saying that it undervalued. And that was that until a couple days ago when Kohl's put out its preliminary proxy that they're using to battle the activist for the board seats, where Kohl's disclosed that Goldman Sachs has engaged with over 20 parties since January up and through March, proactively seeking out a buyer for the company. The reason why I think that this is such a big deal and was overlooked by the market because the stock went down so much with the consumer stocks a couple of days ago, Monday, I believe, is because up until that point, it was widely believed that the current board, the entrenched board, is against the sale at pretty much any price. And it would have taken the activists to win the board over to sell in the 60s or 70s, let's say. It doesn't mean that the board will accept whatever price is achieved during this process. So there's still a risk, of course, that final bids come in too low and they don't take it. And then you have to wait for hopefully the activist to win and then take whatever bids on the table. I think it's far more likely that this process results in a sale. My guess is it's in the high 60s to high 70s price range. And I like the setup of the call spreads. I'm not that big in them. It's 100 basis points or 125 basis points in total. But it seems like a pretty good setup to me. The same backstory here as why I liked CNR, which I'm going to take a victory lap on in a second, is because the VIC write-up and the VIC thread thinks that it's worth much more than $64. I guess the real estate is all under monetized, and you could do sell leasebacks and do all sorts of crazy stuff with the real estate to finance your bid for the company. So with that backdrop, it makes me believe that it's likely to go for substantially more than $64 when this is all said and done. Again, not a big position. The call spreads are paying, they're paying a very nice return. I think I was putting on the 62.50, 67.50s for like $1.40, $1.35, $1.30. I put on a small one many weeks ago and paid like $1.90 for it, $1.95. Because I think in general, you're looking at something that's probably like 65% chance of happening through that price point, through the 67.50. So if you could put it on at $1.40, it's pricing in a 28% chance of happening versus what I would say is probably a 65% chance. 65 is on the low end. So I like KSS. CNR was a huge winner for me. I mentioned not in the original YouTube, but in the last YouTube that I made it much bigger. And I kept making it bigger after that YouTube. It was common was like a 28% position. And I had on a ton of call spreads. And it worked. It worked as I expected it to work. Pretty straightforward, happened pretty quickly. I was actually, after the last YouTube, I was worried it wouldn't happen for another 4 to 6 weeks. And it happened it happened on the day of the worst stock market day in 6 months. So luckily I woke up to that on Monday to offset my losses everywhere else. So I'm doing pretty good with the special sits on YouTube, I have to say, outside of BMYRT. MGI also worked. I never did the victory lap for that. MoneyGram was a success. And both my biotech ideas were successes, CTIC and CCXI. They were highly controversial, and they both went up 50 to 100% after they got approvals. I'm, of course, waiting on AXSM. That's a big position, the all call spreads. And with AXSM, the interesting thing there is, I think I mentioned this in the last YouTube, is I expect the company to 8K when they are in labeling negotiations, because they basically said they will do that. So at any day we could get a huge move in AXSM, either a CRL, which I find very unlikely, but definitely could happen, or an AK that says they've entered into labeling negotiations. I still think that March and April, a downside vol is underpriced right now, because again, a CRL can come in any day. I haven't done anything there. I still own some March 20 puts that are virtually worthless. And I still have on that April 25, June 25 calendar spread that I like a lot, because it helps protect me in the downside if we get CRLs in the next 6 weeks. Talk a little MagnaChip. I bought a lot of MagnaChip over the last 3 days, because when CNR worked, I was able to take the CNR off, and it freed up a ton of capital and margin. And MagnaChip in the low 16s is just stupid. So the only thing I want to say about MagnaChip is I went back, or actually a smart follower of mine on Twitter, who I assume also watches these videos, told me that back in August of 2020, the CEO of MagnaChip bought 10,000 shares in the open market. And if you look at the proxy, which I encourage you all to do, to reread the whole background of the Wise Road deal, you could find that in the preliminary proxy that was published, I believe, in April of last year. You will see that in June and July, they had offers for the company, but the company was not for sale, so it was not in a process, and they rejected the offers. And then he bought stock in the open market in August, and then by the end of September, they engaged JP Morgan and were in a full-on process. So just because there was insider trading a few weeks ago does not mean MagnaChip can't be sold. It definitely means they weren't. Of course, they're not imminent near a sale. But my guess is the company said they will get much better bids after they put up a couple quarters of improved earnings after the supply stuff is done. I talked about this I keep saying the last YouTube. I don't know if it was the last YouTube or not, but if I was the board, I wouldn't take 25 or 26 or 27 today. I would honestly probably wait until March of next year and then sell the company. I don't want them to do that, but that seems to be the smartest way to capture the most money here. Once you're putting up the real numbers in 2023, I mean, it could sell for $40 a share. I bought, a lot of my call spreads have been decimated. So the beauty of call spreads is that once I take them hit on them and they've gone down so much, I have marked to market whatever the losses are, doesn't matter anymore, and I can resize other call spreads. So I bought Jan 2025s this week for $1.10 and $1.15. And I think that gives me plenty of time for them to put up good numbers, have good guidance, and potentially still be sold by January of 25. I love my MX. On that note, I don't think I did say this. A friend of mine's firm has acquired a one-on-one with MagnaChip and the CEO on Monday in Dana Point, California. And I will be there leading the meeting. So I'm sure, come back with a lot to tell you Monday evening or Tuesday morning. I'll schedule a YouTube for Tuesday, actually, of next week, and I will tell you everything that is said. Now, to be clear, most of this meeting is going to be me lecturing them. I don't really get much out of asking questions with a management team, and I'm not expecting any great answers for the questions that we all have. But I will say this to them, and I will say it in very clear terms. Either they're terrible capital allocators, or they're lying about their 2023 guidance. Both can't be true. Well, you can't be a good capital allocator and the 2023 guidance be achievable. You know what I'm fucking saying? And I'll explain. If the company really believes that the 2023 numbers could hit, they should be aggressively buying back stock right now, much more than $37.5 million. As soon as they finish the ASR, which should be done any day now, it's done by the end of March, so it might already be done. They should be press releasing another $37.5 million ASR. But what they really should be doing is a tender offer between $18 and $21 for $100 million of stock. And that's just a fact that if you think you're going to do $2 a share in earnings next year, then you shouldn't have an overcapitalized balance sheet. And every excuse they've made about why they can't be more aggressive with a buyback is bullshit. Okay. The company ran net debt for years, no cash at all, hundreds of millions of net debt. Okay. That's number one. Number two, Wise Road, a private equity firm, was buying them and would have ran net debt. And that was now as the new company without the fabs. So to then come back and say you need $100 million of cash on the balance sheet for customer confidence, which even if they did keep the $100 million cash on the balance sheet, I currently estimate that they have $300 million in net cash, which is the way I come up with that is I take current assets and I subtract current liabilities to normalize for working capital. They have $7 a share in net cash, which is way too much money. Okay. So let's be clear. If they're lying about their 2023 guidance, that's not a good outcome for us, right? It means they were good capital allocators, that they didn't buy back more stock here, but that's a shitty outcome for us. I, of course, don't think that's the case. So I'll be really pushing them on that. And I'll really be pushing them on understanding the capacity constraints, the supply constraints into the second half of the year. And talking about MagnaChip, MX, my biggest position. I've done like 800 videos on it. Yeah, and Jason, nice to see you. You're a new YouTuber. So anyway, that's MagnaChip. People were worried. One thing that people were worried about on Twitter is this Russia and the supply issues now with ZEN. I'm going to ask them about that. I'm guessing that's a big nothing burger, but I'll come back and I'll let everybody know about that. Just to crystallize how cheap this stock is, when MagnaChip in March of 2020, when MagnaChip was $19 before the last processor, $18.80, okay? That was the unaffected price before Wise Road was rumored to be buying them. When it was $18.80 and it got sold for $29. If you look at today, you have three things that were not in place then. One, you have a $1.50 breakup fee. Two, you have 4% fewer shares from the $32.5 million buyback. Plus, you'll probably have another 5% shrinkage before they're all done with the other $37.5 million buyback. And three, you're rolling forward numbers a full year. So your DCF is a year later. Okay. And also you can use that, you can use the SMH as a comp, or you can use just the fact that the dollar has been depreciated over the last year. It's worth much less. Putting all those three, now on the negative side, you've had a very tough year with supply chain stuff that should all be transient. And you're going into, on the positive side, you're going into what should be gangbuster earnings in the second half of 2020 and 2023. Okay. Putting all those three things together, the $1.50 breakup fee, the 4% shrinkage in shares, and the rolling forward the DCF, your stock price now, the 1680 stock price, is something more like $13.50 or $14 versus the 1880 it was before there was ever a process, and the $29 it was that they sold for. $14. It's crazy. It's half the price than the price they sold for. So your margin of safety, I think, is just huge. And yeah, I'm pumped. That's also the case. Like when I lose money, like, so that as that's gone down, I know that my max pain there gets lower. I think it would take devastating stock market to have that go to, let's say, like $12 or $13 a share. Yesterday, someone put a 70,000 share market order in like a 30-second period, and it made it wash to like 15.90. So my guess is that the liquidation's over there, and it went down not just because of the stock market, but because of the insider transactions made the ARBs say, well, there's no deal happening. So the ARBs then finally gave up on this once and for all. And now you're just left with people that actually want to hold the stock and see what happens over the next 12 months with the earnings and, of course, with an eventual sale. Because that is the end game, guys. They did a full process. Wow. Look at that. How do I have spam? All right. I'll report. I have some June spreads along with July and KSS. Enough time for the June spreads to capture a sale, or should I roll these out? Jason, I think June is just as good as July, and I'll tell you why. I think they're probably pretty going to be pretty aggressive with this process, and you could have definitive bids being lobbed right now. And if we don't get a sale by the May the May proxy, I don't think it happens maybe even by July. So my guess is June and July, you're indifferent to either of those. I would not worry about that. I'd be more worried if I had like April. But I think you probably can have a deal by April here. If they've been reaching out to buyers and talking to buyers and management done presentations in January, February, and now March, you're at the stage of offers, and hence that's why they've had 2 offers, right, that they rejected. So you're much further along here than just getting started. So no, I would not worry about your Junes and your Julys not capturing it. Let's talk SHLX just a little bit. I still love that name. That's a big position. It's like a 27% position or something. That one doesn't have as much upside anymore, but I think your margin of safety is huge. And I did a whole YouTube on that, so you can go rewatch it. But to sum it up, after looking at, looking and relooking at the comps, I can't see it being less than a 10% premium. That to me would be the worst outcome. And that gets you to like 14, 18 around, I think 14, 18, plus you get the 30-cent dividend. And I think that would happen in the next 2 months. On the upside, I think you can get as much as a 20% premium. But my guess is going to be somewhere between a 15 and 20% premium. So you're looking at what I think is somewhere between 14.90 and 15.50 for a final price there, plus a 30-cent dividend. So I remain very enthused with SHLX. It is not affected by the volatility in oil prices. There's a toll. They get paid a toll annually, and it's not variable based on oil prices. And yeah, remember, it's a MLP, so you're gonna have to deal with a K1 if you do buy that. So it's a pain in the ass with taxes, but I ain't your tax advisor or your investment advisor. Nothing here is investment advice, as you all know. Let's talk a little bit about Zendesk and Momentum. because I talked about those in a previous YouTube. You could find it. But Zendesk to me is particularly interesting right now. And I've made that bigger. I bought call spreads on that on top of my combos. My combos in that were I own July 120, 140 call spreads, and I sold 180 put spreads. But 2 days ago, I just bought call spreads. I bought July 125, 135s, and I bought a little, I think, October 125, 135s. The reason why Zendesk is interesting, or I want to talk about it, is on March 1st, Bloomberg published a new report that the consortium of private equity firms, of which Zendesk rejected at the 127 to 133 range, that they are close to securing a $5 billion financing package for a renewed bid for the company. That sent the stock to 125, and it's now back down to 117 because of what the market's done. This is very interesting to me because I don't think that the private equity firm would be that far along in financing if they haven't gotten friendlier with the board of Zendesk. And it would appear to me that they're trying to reach a friendly deal that would then eliminate Jana, the activist. There's an activist involved there too. That's running a slate of four board members. And I think that management at Zendesk and the board realizes that a private equity consortium takeout is far from the worst thing that could happen to them, right? It's not a strategic. There won't be any layoffs. And I think it's always better to run a company privately than it is running it publicly. So your risk here is that the markets are so volatile, and this is also a super high multiple stock. So I don't have any confidence in what the downside is in a NASDAQ that goes down to the 15%. Or anything like that. So for me, I can't own the common, but I can definitely, risk a bunch of money in call spreads. And I was comfortable putting on those combos because I don't start losing money it goes to 100. I'm protected because it's a put spread. I'm not just short the puts. So I added quite a bit to that. That's like a delta adjusted position, probably about 10% now. And Momentum, I still own all that. I own the 22.5 July call spreads, and I'm short March 15 puts, and I'm short July 12.5 puts. And I've talked about that thesis already. So you can go back and look at that. That's not nearly as further along as Zendesk, right? There's no current active bidders for Momentum, though we know there were two private equity firms that wanted to buy them before they were acquired by Zendesk. So those buyers presumably definitely still want to buy it. The only question is what price they're willing to pay for it, given the business has decelerated pretty dramatically. Oh, I hear kids. I think that's about it. What else did I say I want to talk about? Anything? This was a pretty short YouTube. Any other names you guys want to talk about? Oh, Amplify, I wanted to say they lost 2 board of directors members today. And people might be like, wow, why would 2 board of directors members resign the same day? It's a nothing burger. Those guys were part of Furtree, and they were on the board when Furtree owned 40 or 30% of the company. And the fund shut down, that energy fund, at the worst time in December of 2020. And the Furtree sold their entire position in a big block trade at $1.15. And those 2 guys remained on the board until today. And I thought it was ridiculous that they were on the board. They have no stake in the company anymore. And they're just finance guys. So I'm sure the company said, your time is up. We're not paying you $100,000 board, $100,000 a year to be on our board when you don't even have a stake in the company anymore. And so that's why they're gone. I'm virtually certain it's not a result of any disagreement with the company. They would have to put that in the 8K. Facebook. I don't own Facebook anymore. I did make a Facebook trade. I think I might have mentioned on here. I think Facebook's really interesting. I mean, the only thing about Facebook that I don't like is, as a user of the big tech companies, it's the only one I don't use. And it's the only one I think that can be, can be removed from lives eventually. Not just Facebook, but Instagram even. Though Instagram, of course, is much more entrenched. than Facebook is. But Facebook's incredibly cheap. If you back out the money they're spending on the metaverse and everything else, it's a very cheap stock. But it's just trading with the market. But you could do a lot worse than owning Facebook. I don't even know what it's at. Is that $200? Probably up a lot today. What's it trading at? It's still below $200. I mean, you could do a lot worse. But if I was going to blindly buy, big cap tech, which I don't do, I would probably rather own Google, just because the moat there is just so insane, and no one's going to take over Google from a search or YouTube perspective. I still think the same about IMVT. I don't own any common anymore. I just have the Jan 24 call spreads, and enough to where if it works, I'll make a good amount of money. But the margin was so high in IMVT that I sold the common I bought for a small loss. Well, this round of common I bought, I've obviously lost a lot of money there. And I don't foresee the other negative with IMVT is that Roivant has gotten destroyed. So they could still take it out with cash, and they have plenty of cash to do that. But if they were going to do a stock swap, it's now harder for them to do. One of my kids is out here. Hey, you want to come in here? Hey, you want to come here? No? All right. Oh, that was nice. I'm on YouTube. I'm on YouTube. You want to come in here? You come in here. Hi. Hi. Come here. You want to say hi? Oh. Hi. Say hi. You're saying hi to me and you. It's kind of weird, right? Hi, Dylan. You're all done. Okay. He's coming to you. Let's go out. Oi. Playground. So yeah, I don't think that they can. Oh, whatever. I'll let him play. He can play. I'll watch him. It's fine. I'll watch him. It's okay. I'll let him play. I'll watch him. I'll bring him up. So yeah, I don't think that they're going to do anything in the near term, but your risk here is so low. I mean, it's $450 a share in cash. It's trading at $550. There's no near-term catalyst outside of them taking it out. But as you can see, look how well the stock's held up in the disastrous tape the last 2 weeks, right? It's not going up a lot today, but it didn't go down the last couple of weeks. So it kind of shows you have a kind of asymmetric bet here that they do take it out, which I think they would pay between $8 and $12 for it if they did. So I'm totally fine with owning it. I just think, like with everything, I have to make sure I have my money in the right with margins, with the margin requirements of biotech on IB. I'd rather be huge in SHLX for the short term, or CNR was fully marginable, right? So I was able to make CNR huge by not being fully in IMVT, and that's part of the problem with MagnaChip. That's a 50% marginable stock too, and I had to lighten up that at 18 to be able to buy CNR. So I'm always playing around with the non-marginable stuff. I don't have too many stocks that are non-marginable anymore. Most of them are in call spread, things like that. AXSM is non-marginable. AMPY is non-marginable. AMPY reports tonight, by the way. I don't expect anything there. They already gave us the update from beta. So I don't know what they're going to tell us. Any other questions? Hi, Sam. Anything, guys? Or girls? Any ladies in the house? I think that's it. Yeah. As I look at my portfolio here, I don't think there's anything else to talk about. All right. Great speaking, everybody. Take care. Thanks, Brendan. Bye.